Welcome to the Recon Trader. In today's video, I will share some tactical analysis with you over on the Bitcoin charts as the bears basically roared back last week and they look to continue to push Bitcoin's price down. So you might want to proceed with caution going into the next 2 weeks as we approach the end of the month. So with that all being said, before we get too far into the weeds on the charts, we will jump over here to the open interest on the options, and we will take a look at the end of the month closing date, which is going to be April 28th. And the maximum paying price, which is the strike price that the majority of options would expire worthless, is 27,000. Now, you might want to keep that 27,000 strike price in mind as we move forward into the charts, but some other key levels to consider would be on the bullish side is going to be up here around the 32,000 mark. If the bulls are somehow able to apply some buy pressure and get Bitcoin's price above 32,000, or even let's say 34,000, then the majority of the options would expire in the favor of the bulls. Now on the flip side, the bears are trying to apply sell pressure and get the price down below the 22,000 strike price by the end of the month, and that would have all of these options here expiring in favor of the bears. But if they're not able to reach the 22,000 strike price, even a push down here to around the 25,000 strike level, that would be a profitable push for the bears. So with that all in mind, let's jump over to the charts and we will start over here on Bitcoin USDT daily candles on the Binance exchange. And last Monday, which is represented by this red candle right here just above the EMA ribbon, we were looking for Bitcoin to find support at the ribbon, which initially it did, and it pushed back up into resistance. However, since then on Wednesday, Bitcoin dumped and then continued to dump through the week and is now currently in danger of breaking down below the ribbon, which could lead to a deeper sell-off, much like we saw back here where Bitcoin pushed up, moved down below the ribbon and sold off down to the 120-day moving average, which is the white line running through the chart. We could very well see Bitcoin's price crush down below the ribbon and then retrace back down to this 120-day moving average, which would put it at around 23.7 currently. And if you look back on the chart, that level is support here. It was also previous support back in here and resistance as well in a few different spots. So that could end up being a level of support if Bitcoin's price does breach down below this EMA ribbon. And if the Bitcoin price holds down at this level by the end of the month, all of the put options above 24,000 would actually expire in the profit. Now the EMA ribbon is currently bullish. We have our greens and our blues above our reds and our yellows. So the ribbon is currently still bullish. So if Bitcoin's price does find support here, it could push back up once again into resistance. However, if Bitcoin's price rejects up here, then we're just really kind of looking at a double top situation. Now, something else to note, if we look back and check our 6 back into this area here, we do see this level, this 26.5 level, where all these wicks come into essentially, is a pretty good level of support on this last bit of consolidation for Bitcoin. So again, this 26.5 level is definitely going to be a key level for the Bitcoin bulls to hold. If the bears can crush the price down below that, then it could be open air down to around the 23.5 level, or even all the way back down here to around 19.5, where we see the low before this current move up. So with that in mind, let's draw in a Fibonacci retracement from the high of 31,000 and we'll swing low to the 19.5. Now, referring back to last week's video, we were looking at this candle here and we were looking for support from the ribbon. In addition to the 786 level was coming in at 28.5, which would have been previous resistance, as you can see back here. And we were looking for that to flip into support, which it did briefly, but Bitcoin's price did manage to sell off below the 786 level. So then we were looking at, again, the bottom of the ribbon to become support, or it just so happens the 618 level comes in at 26.6 or 26.5, which matches up with all these wicks back here for support, and it is pretty close to the bottom of the EMA ribbon. So overall, the 618 level or 26.5 area could be our next real key level of support for Bitcoin's price. A breach down below that, and then we might have some support down here around 25,000, which was previous resistance back here. A little bit of resistance here as well. So can that turn into support? I don't know how strong a support the 50% mark is going to be. I would actually, again, be looking back down here at the 382 level, which seems to come in line with the 120-day moving average. They're almost touching, and that would put Bitcoin's price right around that 24,000 level, or probably a zone between 24,000 and 23.5 for support. A move below that and Bitcoin could then be headed back down towards 19.5. Now, on the flip side, if the bulls can get control of this price action and get it above the 786 level for starters, which is going to be 28.5 to probably more realistically above 29,000, then the bulls would be looking at their next target of 31,000, which obviously it rejected from. After that, if Bitcoin's price can actually breach the 31,000 level, the next level is going to be pretty much the 1272 level, and that puts it at 34,000. So referring back to the expiring options, that 34,000 price target would put quite a few of the call options in profit by the end of the month. As you can see, that would put the strike price right here, and all of these call options would expire in the money. The puts obviously would be out of the money. And so to quickly summarize, a few targets the bulls need to be shooting for is going to start off at 29,000, then 31,000, and then really bullish price action would take it up to 34,000. Now on the flip side, the bears' first target is going to be the 618 level, which is going to be 26.5. A break down below that, then the bears would be looking at this 50% level around 25,000. After that, the next bear target is going to be the 382 level, right around 24,000 to probably 23.5. Beyond that, then it's open air pretty much down to more than likely 19.5. So I think that's enough jaw jacking for this video. If you're bullish, definitely proceed with caution, as it looks like current price action is in favor of the bears. Now, if anything major happens over here on the charts, I will do an updated video. So now would be a good time to shoot the subscribe button. If you like these type of videos, do me a favor, spike a like. If you have any questions or comments, drop them in the comment section down below. I do read all the comments and try to respond to them all. So take a moment, drop a comment. And with that all being said, at the end of the day, never send your money into battle without first doing your recon. See you in the next video.